More bad news for Canadians.
I don't know how else to put this, but the Canadian economy is getting absolutely shafted by the United States of America.
You see any customers in here? It's 11 o'clock in the afternoon.
Canada's real estate market might be imploding, and with it, the rest of our economy.
Canadian housing starts collapse in Ontario.
But right now, that backbone is cracking. And who's supposed to fix it? Mark Carney.
For areas that were down as much as 60% in the housing crash.
Condo sales in some major Canadian markets are continuing to drop.
One of the most developed countries in the world just watched its small business sector bleed out.
Canada's auto industry, Stellantis, is moving.
Welcome to Canadian Rant, the channel where we pull back the curtain on what's really happening in this country, not just what the headlines let you see. Today, we're confronting a truth that too many people ignore. Canada's industries are collapsing. The manufacturing plants closing. The retail giants shutting their doors. The steel and export sectors crumbling. In 2025, we've seen the decline ripple across multiple sectors. For example, the iconic Hudson's Bay Company is liquidating hundreds of stores and laying off thousands of workers. The steel and iron and steel manufacturing industry has taken a massive hit. Export declines of around 27.5% forecasted for 2025. A major auto assembly plant operated by General Motors Canada halted production and laid off hundreds of workers. These are not isolated cases. They're signs of a system under stress. When industries struggle, communities struggle. Jobs vanish. Futures get canceled. Hope fades. So how are Canadians supposed to survive when whole industries collapse beneath them? How do you plan for a future when your job is hanging by a thread, your town's economy is dying, and there's nothing to fall back on? If you believe this story matters, if you've felt the tremors of these closures in your own life or community, hit subscribe and join us. Because we're not just ranting, we're speaking the truth.
I don't know how else to put this, but the Canadian economy is getting absolutely shafted by the United States of America, and the guy that is supposed to fix this problem continues to fail at fixing this problem. For anybody who is unaware, tariffs just went up again, this time on Canadian softwood lumber, meaning that jobs in the forestry sector in British Columbia and across Canada are about to be in a lot of hot water. This is a deal that the Canadian government has been trying to get done for the last decade, but unfortunately has not been able to for some reason. Which is crazy because Stephen Harper, when the Conservatives were in power, were able to get this deal done in 45 days. What's crazy to me is the whole reason why Mark Carney got elected was because people thought he was going to be able to outfox Donald Trump. But so far, every time he goes to Washington, all he does is have a fun time with his best friend Donald and comes back empty-handed with nothing to show for it. And by the way, I don't think Mark Carney is as horrible as some people make him out to be. The one thing that he was elected to do, which is essentially protect the Canadian economy from the States, he continues to fail at doing. At a certain point in time, you got to ask yourself the question, is he ever going to figure it out?
Hey, Mr. Carney. This is Home Depot in Canada. You see any customers in here? It's 11 o'clock in the afternoon, or in the morning.
Canadian housing starts collapse in Ontario, and they fall to levels not seen since 2009. Housing starts have grinded to a halt. Demand is collapsing. And you know what? Despite what the politicians are saying, the reality is new housing starts have plunged. And from March, there was a decline of 3.3% from the month before that. Ontario should be booming. Think about it. The thaw has happened now. There is no snow. Construction can happen much more freely. There's no weather impediment. This is where you ramp up. Obviously, that hasn't happened. And usually that ramp up starts at around the February thaw into March, into the spring and summer market. But that doesn't happen. And I don't see that happening, actually.
More bad news for Canadians. The Stellantis plant closure in Ontario, that's thousands of good jobs gone. And now new U.S. tariffs on softwood lumber will hammer mills back home in BC or right here in Quebec. These mills already struggling to stay alive. It's the same story in two industries, manufacturing and resources. We can't seem to compete anymore, not because Canadians aren't capable, but because our own government keeps dropping the ball. Instead of standing up for our workers, we've watched foreign competitors cut more red tape, attract investors, not chase them away. and make better deals than us. Meanwhile, the people who pay the price are the ones on the line. The millwright, the welder, the sawmill crew, the family trying to hold on to that paycheck. We used to build things here. We used to export with pride. Now, every headline is another warning that we're slipping behind. Canada needs to compete again in manufacturing, in resources, in every sector that keeps this country strong. Because without those industries, there's no prosperity left to share.
And home selling for well over asking price, that offers some relief to many Canadians waiting to make this big purchase.
Buyers understand that for the first time in a long time, they hold the cards for most markets across Canada. And this is a good thing, that you can buy a house without having to make a decision in 20 minutes, and you can put conditions in. Like, this is the type of marketplace we've been asking for a long time.
An oversupply of homes for sale have brought prices down from their 2022 peak. Also helping buyers are lower interest rates as a result of aggressive rate cuts by the Bank of Canada. But for many, home prices are still out of reach.
It's not like homes have been cut in half in price or anything. It's still very expensive. You hear what's happening with the overall market and you assume like everything's a buyer's market, everything's a seller market, but it's just not the case. Like, one street over because of a school district can change the sale price by $100,000.
Affordability has only improved by a third nationwide. That's according to RBC research that looked at the past 15 months. Vancouver and Toronto recorded the largest price decreases, but they're still Canada's least affordable markets. And in places like Quebec City, Montreal and Victoria, home prices are up over the past 5 quarters. And one section of the market where inventories are sky high are condos.
We have more condos for sale than we've ever had before. A large portion of the demand previously for the condo market was investors, and they're not participating in the market like they previously were.
And that has a ripple effect for those waiting to sell their condos in order to afford a house. Also keeping buyers on the sidelines is economic uncertainty, especially as U.S. tariffs impact businesses and jobs.
Canada's real estate market might be imploding, and with it, the rest of our economy. According to new data from the Canadian Real Estate Association, the sales to new listing ratio, or the SNLR, fell to 49.3% in June, marking the weakest June demand balance since 1995, a time when Canada was in its most severe real estate crash in modern history. And it's not just the level that's alarming, it's the speed of the decline. The SNLR has now dropped for 4 consecutive years, falling 23.8 points from its peak during the pandemic. A collapse, once again, not seen since the lead up to the 90s housing crash. The ratio's plunge is being driven by new listings rising 8%, while sales ticked up just 3.5%, meaning supply is now growing more than twice as fast as demand. Now, you might be saying, well, wait a minute. That should be impossible. We're in the middle of a housing shortage crisis. We're also told the housing crisis is being driven by a lack of supply to meet surging population growth. And on paper, this is true. Canada added over 1.2 million people to its population in 2023 and over 1.3 million in 2024. But if demand is surging, why are homes suddenly sitting longer on the market, and why is demand declining? Well, because now the tide has shifted from a housing shortage to an affordability crisis. The cost of living is killing the market. Interest rates remain stubbornly high, wage growth is completely stagnant, grocery bills and rent have absolutely exploded. In fact, the average take-home income for a family of 4 is $8,000 less than the average cost of living for that same family of 4. So the average Canadian simply can't afford to buy, no matter how badly they want to. The result, of course, is the current paradox that we're in. Record population growth with millions needing homes, yet buyer demand is completely disappearing. And this is not just a social crisis, it's a market crisis. The last time the SNLR dropped this quickly, it triggered the sharpest real estate correction in Canadian history. In the Greater Toronto Area, average home prices dropped 34% from 1989 to 1991 and continued to decline through the 90s. From 1989 to 1996, Canadian home prices dropped by nearly 40% nationally when adjusted for inflation, and housing starts plummeted by over 50%. Canada fell into a deep recession from April 1990 to 1992, with real GDP declining by about 2% in 1991 and unemployment rising from 7.2% to 12.1% by 1992. Nationally, over $400 billion was wiped out in household assets alone. Canada was grinding through this for nearly a decade, and if these numbers are as strong an indication as the Canadian Real Estate Association says, we may be heading down the exact same path, but this time, it's not just speculation or overbuilding driving the crash, it's systemic affordability failure driven by bad government action and bad government policy.
So Ontario is currently in the middle of an 08 style housing collapse as per this chart. Okay, this is the US in 2007, this is Ontario in the 90s, and this is Ontario right now. And as you can see, there's probably, it looks like another 2 years to get to the bottom of where the 07 housing crash would have bottomed. Which, if we're pacing for this in Ontario, would be good news for real estate holders in Ontario. One thing I'd like to point out is this is the US housing price on aggregate, right? So there were a lot of areas across the US that went down a whole lot more than the aggregate price. I'm not even sure what the number was, if it was 30%, there were areas that were down as much as 60% in the housing crash. And I'd probably make a bet that in the aggregate, a lot of the cheaper areas across the US probably didn't go down very much, and it's probably the more expensive areas that went down a whole bunch to bring down that aggregate price. Now that being said, when you talk about Ontario, it's like the GVA that's the GTA that's expensive, and then the rest of Ontario is pretty cheap to my understanding. Like there's homes in Southern Ontario for like 250 grand. And our interest rates here are a full % lower and $1 cheaper. But if you're going to look at Canada and say, well, okay, in the States, it's typically the more expensive markets that went down the most in a collapse, you'd be looking at the GTA and the GVA. And you know what this chart actually reminds me of? This is Bitcoin in 2017. Traded flat for a while, had one final capitulation event before finding a bottom. And this could be that event right now. But I'm not comparing Bitcoin to well, I guess I just did. I thought you'd find it interesting.
You know what's unbelievable? Well, it's unbelievable that Canada, one of the most developed countries in the world, just watched its small business sector bleed out because the post office couldn't keep it together. Yeah, I'm talking about the Canada Post strike. What started as labor negotiations turned into a full-blown collapse of trust. And right now, thousands of small business owners are sitting on canceled orders, refunding debt, and broken promises. All these going on while the big players and bureaucrats keep pretending it's all under control. Well, spoiler, it's not.
Only in Canada can 68,000 postal workers threaten to strike while handling a fraction of the workload they used to. Mail volume has collapsed from about 8 billion pieces a year to just 2 billion, and it's still falling. Most Canadians don't even get door-to-door delivery anymore. 3/4 of households walk to community mailboxes. Meanwhile, Canada Post is broke. It's kept alive by taxpayer bailouts. But sure, elbows up, fight the good fight. Just don't let declining demand, financial collapse, or modern reality get in the way of the old routine. Is this about protecting jobs or protecting a system that doesn't work anymore?
Let's rewind a little so we can get a good understanding of what's going on. For years, Canada Post has been sinking deeper into trouble. They reported a loss of $841 million before tax in 2024. That's straight from their own quarterly financials. Costs are going up, mail volumes are dropping, and parcel competition is eating them alive. So when 2025 rolled around, tension inside the postal system was already boiling. Postal workers under the Canadian Union of Postal Workers, CUPW, said enough was enough, and frankly, I don't think anyone can blame them for being fed up. Wages weren't keeping up with inflation, routes were understaffed, overtime was exploding, and new reforms were being announced that many felt would cut jobs. Then the government steps in, announcing reforms that didn't exactly sound like help to the workers. They talked about modernization, cost efficiency, and new delivery models. Translation? They were trimming or trying to stall because a lot had already happened up until that point. That was the final straw, and by September 25th, 2025, postal workers across the country walked out and went on a full strike because they were fed up. And just like that, the entire backbone of Canadian small business froze overnight.
So the impact on Canada Post is pretty severe and devastating for me. My name is Scott Wingfield, and I'm the owner of Art Ink Print in Victoria, British Columbia, and I am a fine art print specialist for artists across Canada. So last year, the business lost about $100,000, which is 25% of my yearly income. We probably do about maybe 10 to 20,000 greeting or Christmas cards a year. We had 0 last year. no Christmas cards were done last year. And I've already got artists who are crying. I got artists who are panicked. They're shutting down their website because you can't put anything in letter mail. So it's something the business plan of this business was built on letter mail being available. Last year, it took 5 weeks for the federal government to step in and do something. They sat back and watched, take action and stand up for small businesses across Canada.
Now you understand what's going on, right? But you see, things have currently spiraled out of control. When the strike hit, it wasn't some small regional disruption. It was nationwide.
Canada's oldest company, Hudson's Bay, is on the brink of collapse. In fact, you can expect to see liquidation sales as early as next week. The company is nearly $1 billion in debt. It announced just a couple days ago that unless it finds a viable option moving forward, they'll have to liquidate their 80 stores and put more than 9,000 jobs at risk. The department chain dates back all the way to 1670. So how did it get this bad? Apparently they've been struggling since the pandemic when people stopped shopping in stores. They also attributed a decline in consumer spending to the tariffs. This combined with the nearly $1 billion that they owe brands like Estee Lauder, Columbia, and Ralph Lauren. For months, they've been having trouble paying their landlords and service providers. Do you think the fall of Hudson's Bay was inevitable? Why or why not?
We have more now on the breaking news in Canada's auto industry. Stellantis is moving Jeep Compass production that was planned for its Brampton, Ontario plant to the U.S. That Brampton plant has effectively been on the front line of the U.S. trade war since President Donald Trump announced his plan to bring auto tariffs back in February. Retooling has been on hold, and more than 3,000 unionized Stellantis workers have been on layoff. Stellantis does say it has plans for the Brampton plant, but the automaker says it wants to hold discussions with governments before saying more. Let's go now to Lana Payne. She is the national president of Unifor. It is the primary union representing Canada's.
Here's the reality nobody wants to admit. Canada's industrial backbone is snapping in real time. And this time, it's not just lumberjacks not making a profit. It's 3,000 auto jobs, generations of manufacturing pride, and any remaining illusion that Canadian leadership knows what it's doing. Stellantis just announced they're moving Jeep production out of Brampton, Ontario, straight into Trump's America. The workers, they found out via automated message. The politicians? They're scrambling for cameras, pretending they didn't see this coming.
Auto workers. Lana is joining us this morning from Toronto. Good morning, and thank you for making some time for us today.
Good morning. Thanks, Hillary, for having me as well.
I'm hoping to get some of your initial reaction, what you thought of, what went through your mind when you first heard this Stellantis announcement.
It's been a very, very difficult year, Hillary, for all of our members across many sectors of the economy, particularly the auto sector, and now, of course, the forestry sector, too. We have been pressuring governments since the start of the year when Donald Trump basically launched this trade war against Canadian workers and Canadian industries. We've also been pressuring companies to keep production here in Canada.
We do want to get more reaction to this news today and the decision by Stellantis and what it means for workers. So joining us now is the Mayor of Brampton, Ontario, Patrick Brown. Mayor Brown, thank you for joining us.
My pleasure.
So you've said that you were deeply disappointed by this news. That is something that has been shared by many other Canadians who are speaking out about this. What kind of impact will it have on the community of Brampton, both economically and, of course, emotionally, too?
3,000 jobs at Stellantis with Unifor Local 1285, highly trained, highly skilled, spent decades working, dedicating their lives to this plant, and to be abandoned is devastating, to say the least.
And there's Canada's lumber industry having to deal with the pain of tariff on tariff. A 10% hike on an existing 35% tariff, plus a brand new 25% tax on finished wood products. CTV's Sarah Plowman spoke to a cabinet maker in Shediac, New Brunswick, about the hit to business. Okay, Sarah.
Sandy, 20% of the cabinets of the vanities made here at Glenwood Kitchen go to stores in the U.S. And the threat of these tariffs means that U.S. customers have already called to cancel, to put some orders on hold. And the company says that if these tariffs go ahead, they're concerned that they have to look for customers elsewhere in order to protect their own employees. They say that they're concerned that in a few months, U.S. business could just dry up.
It's frustrating that you, for 40 years, you worked on something, you developed some friends, relationships, long-term partners, selling your product. It's been great. And then all of a sudden, in 3 months from now, that could be wiped away.
People here will be watching the Prime Minister's visit in Washington closely, hoping that somehow an agreement could be reached, somehow that these tariffs won't go ahead as they're expected to on October 14th. Now, the tariff, the 25% tariff on furniture and cabinets is new. It's also set to go up more next year. But this is also in addition to a 10% tariff on softwood lumber and timber, countervailing in anti-dumping duties on softwood lumber. Now, in a province where the forestry sector is vital, Premier Holt has sent a letter to the Prime Minister urging him to make this, coming up with a solution, a top priority.
When an industry closes, it's not just a factory shutting down or a store going dark. It's a town losing its heartbeat. It's a family losing its income. It's the promise of stability vanishing. Think of the workers at Hudson's Bay. Decades of history, iconic brand, and suddenly, everything goes away. That means mortgages unpaid, children worried, savings evaporating. Think of the steel workers, the ones whose livelihoods were built on iron and export demand. Tariffs hit, demand drops, jobs vanish. Those communities don't bounce back overnight. Think of the auto plant worker whose shift ends for good, whose job moves overseas, whose hometown feels forgotten. These aren't statistics. These are lives. When industries collapse, the ripple spreads. Local businesses close, real estate slips, tax revenues fall, public services shrink. The cost of living goes up, the support network weakens. And the hardest part? Many of us feel powerless. We're told, adapt, hustle, retrain. But when the entire ecosystem is failing, when there are fewer jobs, more competition, lower wages, what's the realistic path forward? It's not just about finding a new job. It's about rebuilding dignity. It's about restoring hope. The system wasn't just failing industries, it's failing people. And if we don't pay attention to this moment, if we don't demand accountability, support transition, and invest in futures, then more industries will collapse and more lives will be broken. But there is hope, because the strength of Canada has always been its people. The communities that stick together, the workers who show up despite the odds, the families that believe tomorrow can be better. If you're watching this and you've been affected, lost a job, seen your town decline, felt the anxiety of what now, you are not alone. Your story matters. So let's make a promise. We'll tell these stories. We'll hold those in power accountable. We'll fight for a Canada where industries thrive, not just for profit, but for people. Because surviving isn't enough. We deserve to live. This is Canadian Rant, where we speak for the ones who feel forgotten. Like, share, comment your experience. Let's build a community that refuses to stay silent. Because if industries collapse and we remain quiet, we lose our future. But if we raise our voices, stand together, demand change, then that future still belongs to us. Thank you for watching. Stay strong, stay informed, and stay connected. We're in this together.